thank everybody for joining us again for another edition of the live Net Lease Industry Show. Today we're going to be covering U.S. Trade Court temporarily blocks Trump tariffs. Then the appeals court reinstates it. Uncertainty. Breaking news of President Trump's tariffs is shaking up the net lease market and the capital market. So we're going to unpack some of what that means, how we're going to adjust for this. And it seems like a back and forth thing, but it is what it is. And we just got to learn more about it and see what the best thing moving forward with it. We're going to go over a couple FAQs that's kind of related to that. And in today's educational segment, we're going to talk about kind of the importance of how to navigate through tariffs, through instability. And actually, this is a good case study because once we see how a lot of these companies react to this and see which ones adjust and ends up on top and see where the losers are. But at the end of the day, when I'm kind of running through this quick news update, and things is rapidly changing, that there's some companies that just have a really defined business model that makes sense and that can make better sense for you. So I appreciate you guys being with us this evening, as well as the erratic schedules. But we did vow that we'll be going live each and every day. But we're here. Just a quick reminder, we will be in Indianapolis, June 5th, 6th, and 7th for the 24th annual Mr. Landlord National Convention. So we'll be kind of talking about net lease, 1031 exchange. So if you happen to be in that area, bought tickets, I'd love to meet you. We'll also have a booth there. Me and Quinn will be shaking hands, meeting you guys, and look forward to a good time. Again, anyone who grabbed the book, the Net Lease Playbook, we appreciate you again. And again, just grab a copy and let us know what you think. We appreciate any feedback and stuff so we can be able to make our content and our information that we give to you guys a lot better. So, and also be on the lookout. We're going to be making an announcement pretty soon. We're just kind of whittling down some of the details, but the first edition of Mailbox Money Magazine is going to be soon coming out. It's going to be featuring some of our clients to kind of talk about their story. And I selected just a diverse group of them that have some unique entries into net lease that I think will be very helpful to you guys. So be on the lookout for the announcement of that as we kind of finalize some of the pieces and we send that right out. So as you can see, we've been pretty busy. We've been a lot of stuff is going on. The magazines, the books, the tours, a whole bunch of type of stuff. So next you'll see us on tour singing. So look out for that as you see me on tour and featuring Quinn's father who play saxophone. So look forward to that. Let's see. Let's dig into the news. And I apologize for the delay. We was planning on getting started around 5, but had some issues with the streaming service. So I had to switch over to a new browser. We worked it out, but I wanted to kind of share the screen of the news report, but I'll just read it while I have it here. So from CNBC.com, Trump tariffs reinstated by appeals court for now. So the story kind of details that, was it yesterday? Yeah, yesterday evening, I believe, there was a injunction to pause the tariffs, and the market reacted to that in a positive way because whether your views on it differs, it's just kind of going down to how it affects the bottom line for, of course, business, the economy, and as net lease investors, your tenants. So we want to kind of dig in deep into the data, and also I'm going to cover a story about Costco's Q3 earnings report, which kind of goes to the thesis of what we've been talking about for the past couple of weeks. But let me just read part of the story so we're up to date with this. And again, this is a moving story. So just want to make sure that everyone's aware of that. And, of course, once we find out more information, we'll let you guys know. So a federal appeals court on Thursday granted the Trump administration's request to temporary pause a lower court ruling that struck down most of President Donald Trump's tariffs. It also goes on to say that Trump administration had earlier told the U.S. Courts of Appeals for the Federal Circuit that it would seek emergency relief from the Supreme Court as soon as Friday if the tariff ruling was not quickly put on pause. So obviously that has happened, and it goes down further, kind of explaining the process from the plaintiffs, which was the let's see here. Oh, handful of domestic businesses, and then the reply came back. So that was pretty quick in the response. But the overall gist of that is that the hyper focus on the thesis of what we've been talking about is to focus on essential service tenants, but also couple that with limited import exposure. Because really what we've been kind of talking about is bringing in this data is when we're looking at selecting a tenant, and obviously we're talking about single tenant property. So it's very important to know that the health of the business is not vastly interrupted to the point where it interrupts rent. So we want to deep dive into the operations of the tenant to see where, if they are importing products that they're reselling, what is the percentage of that that's going to be outside the country, and will their supply chain be heavily impacted? So we want to make sure that is a clear, healthy, or at least of some plan B, or in the case of investment grade tenants and very strong corporate tenants, that they have a strong financial backing to be able to withstand while everything kind of works out. What we covered yesterday about the pause with China was it gave businesses some breathing room to start really planning out. I know you really can't plan out much in 3 months, but like I said, at least you can kind of get the ball started. And also the importance of short-term industrial space, because a lot of these companies that were mildly impacted had front-loaded a lot of their ordering, so they have that here in anticipation of this happening. So just kind of putting some data points together to make sure that once we stack up the thesis and we start making our plans for acquisition or sale, we kind of have kind of the best information as we can to make the best decision moving forward. So the next thing we need to do is to just completely reassess. In some cases, looking at your portfolio and seeing if there's some adjustments that needs to be made. If you have a tenant that is in a kind of a vulnerable position, and you feel very strongly that it may end up impacting the future of it. But again, I kind of look at it from trade pause, because if you see it, how quickly things can move from the pause to the continuation. It was in one day. So again, we want to look at stuff that is a little bit more long term, as far as policy, tax policy, regulation, those type of things, where those will be in place long term, and that will allow you to then now really forecast what's going to happen in the future. As you can see, stuff is just moving so quickly. And the third piece we always been talking about is getting fixed rate debt, long term fixed rate debt, because as the tariffs, monetary policy is affecting Treasury, is affecting bank financing, and it is affecting your ability to buy. You want to make sure that you're locking down fixed rate debt along with your conservative underwriting, focusing sectors like grocery, dollar stores that are resilient, avoiding tenants that are in the apparels, imports, discretionary goods sector, and just hyper focusing on that. And if you want to get to other sectors, you can look also into industrial, because that's going to be a huge spike later on as well. So that's kind of the flash notes that I have for that. Let me see here.
Hey, a question I got earlier today was, I know you had mentioned the industrial piece. Which is more valuable, still the single tenant net lease essential needs tenants, or should investors also highly consider industrial portfolios as well?
Well, I mean, depends on kind of their capacity. Um, I'm a big believer in diversification. So if they have the capacity, once they start stacking up, because we have clients that are repeat clients and they're just buying more and more, to not either heavily focus in one state, one market, one tenant, one sector, that you want to have a nice diversified pot of investments. So if he's in that position to look into it, obviously industrial is always going to be a big demand. With the advent of like Amazons of the world and just trade overall, you're always going to need warehousing and some type of industrial space. So it's always good in there as far as returns. They're getting really good rent per square foot. But we always know it's tried and true. Essential services is never going to go away. Like you're always going to need that. So always position yourself in that. But it really comes down to a good diversification of the tenants, the markets, and looking at each individual piece of real estate to see if it makes sense. So it's a yes to all of it. There's not like one or the other. Obviously, we've been highlighting industrial because of how things were moving along with tariffs, and the data suggesting a huge amount of spike in imports. So therefore, there was a high need in it, and with the need is going to pricing, and so there's goods in all of it, but you just can't go wrong with essential services. So if I had to pick one, and plus, depending again on the investor's entry price point, you probably get more bang for your buck focusing on essential tenants, because that's usually around where most investors are, buying from that $1 to $5 million range. Industrial, depending on the market, depending on the size, could be a large purchase, and if you're planning to say I'm diversify, you'd be able to get several properties in that 1 to 5 mark that will kind of even out and surround up your portfolio. So that's a good question there. Any other question that came in as well?
No, that was the only one.
Okay, perfect. So so that kind of covers this as well. What if my tenant imports most of their inventory? So you have to reevaluate your portfolio. So that's one thing that we was really keen on yesterday, is just looking into your company's business model and seeing if it's heavily reliant, let's say, on China and is getting a lot of its goods. There's a story that came out, I think it's today actually. That was also on CNBC as well, about what Best Buy was talking about. Best Buy, where is it? Doesn't pop up on my screen, but in the show notes, I could probably add that link there. If anyone in the chat sees it, they can pop it in there. You can let me know. But let's see, Best Buy. So Best Buy stock tumbles as retailer lowers outlook. So they've in their forecast, they put that they were going to be increasing pricing on certain items, because they get a lot. Obviously they're in the electronics, that type of space. So and they're getting all that from foreign countries. So now they're going to eat it, or they're going to pass it on to the consumer. So, and that's just an example. I had one transaction with a Best Buy, and I mean, again, it's just that's not the tenants that we focus on and what we talk to our clients to focus on. We're talking about essential services. So we would even be considering a tenant like this, but it just goes to show you how the business model is highly affected with volatility with news like this. So we just want to make sure that we're in more of a more comfortable space. And then buttoning that up with Costco, their quarterly earnings came out. So that another story from CNBC, Costco tops earnings and revenue estimates as sales jump 8%. So I'm very bullish on Costco. They're just a very good run company. But what do they specialize in? Everyday items, grocery items, but discount. So if you're going to be looking at, go at discount, and then that also answers the gentleman's question a couple of streams ago about Should I look in the Dollar General? Yeah, they're in that same space. It really comes down to the real estate. So you want to make sure that you're selecting good real estate. Well, overall in the company, it's in a, I would say, a more solid position. Part of this story reads, as tariffs raise economic worries, let me put my other notes here. As tariffs raise economic worries and potentially consumer prices, Costco could stand to benefit. Unpredictable tariff policy could help drive more customers to the warehouse club, which is known for its competitive prices and bulk discounts and encourages them to renew membership. Its clubs also sells discounted gas and groceries, which are steadier traffic drivers even when consumers pull back on spending. And compared with other retailers, Costco has a large hand in price negotiations with suppliers because of its large size. CEO Ron Vakris, if I think that's pronounced right, mentioned that about a third of Costco's U.S. sales are goods brought in from other countries. So a third, with less than half of those imports coming from China, Mexico, and Canada, Vakras said in March. So notice the difference between Best Buy and Costco. Obviously, they're two different sectors, but highlighting the supply chain and why, making sure why that is important. So when we're looking at tenants, that's got to be part of the formula of what we're looking at. And that's included in your buy box. So that's very interesting as we get more. And again, I think right in that same story, and I just found that out that Costco doesn't do annual forecasts, so they just do quarterly reports. But they've been consistent and they've been doing pretty well. I mean, I don't know if Quinnick sees it. BJ's, Best Buy. BJ's, Costco. You go in there, unless you're going like right before closing, that thing is packed. And especially like when we was going through all of the issues and the shutdowns, packed, and people are coming out there $200-$300, and I'm one of them. Every single time I went in there. So just as a consideration for that, and everyone has their own Costco stories and things like that. So, but anywho, do tariffs affect the value of my NNN property? So is this a correlation with how global policy affects monetary policy, which then affects financing, which affects valuations of commercial real estate? So they're all intertwined together. So yes, it is. So then that's why we need to hyper focus on good, solid tenants, tenant strength, and then also potentially with lease renewal risk and things like that, and cap rates. So it does affect that. But then again, if you're looking at really strong tenants, good piece of real estate, that can help mitigate that risk as much as possible. And our last one today is, should I hold cash or invest now? And we've been getting these questions. It's kind of alludes to, what should I do? Should I hold? Should I? Yeah, there's never a good time to time anything. So you really got to go down with the dynamics and your end goal. What is your end goal, and does it revert back, and then you move forward from there. So you can't time the market. I mean, who would have predicted today's news? Nobody. So you can't really base anything off of that. And I think, again, just hyper focusing on your main goal and moving forward with there. So as I wait to queue up my slideshow, we'll go through that pretty quickly. Shoot us an email at dclark@americannetlease.com or quinn@americannetlease.com. We'll put you on the list, the notification list, when the first copy. So the email will then provide you guys with the digital version of this, and then we have clients that are registered with us, and also past clients will get a mailed copy of this. If you like a mailed copy, let us know. I just need a little bit more information from you. and we can make that happen. But just kind of be on the lookout for that, and I think that'll be a pretty beneficial thing for you to gain a copy. So today's presentation, courtroom drama, investor calm. So as we read in the news, court paused the tariffs and then got reinstated by the appeals court just now. So right now, regardless of if it is still moving forward, what it does is it just shakes the market a bit. It creates that uncertainty. It seemed for like the past 2 weeks, especially as we had the pause with China. Negotiations are going back and forth with like 100 plus countries. We're starting to see the market creep back up and kind of settle out and kind of have its normal volatility. But now, again, we're seeing a lot of, what's the best word here? Judge activity, if you want to say that. The administrative have more colorful words for that. But there's been a lot of activity from judges, and regardless of what side of the aisle and how you view it, that causes uncertainty, regardless of how you shake it. So since we know that the next couple years we're going to see stuff move and shake, that we have to be highly disciplined and focus on why you're buying it, what's your end goal number, and how can we reverse engineer it to make the numbers happen. So the next couple months is going to be shaky, but referring to the last question, I don't want to have people use this as an excuse to not take action at all. That's why we're putting so much information out there, so you're well aware of it. And then we're going to talk about solutions around that, so then you feel comfortable. Some of people have properties where I talked in the past, and they saw a news report and they said, "Nah, I'm not going to sell my property anymore and do a 1031 exchange." And I'm like, it's like if you got a good offer on your property and you're set to make a good profit, and you can now roll that over. Because if you try to do that later when the market is readjusting and then everybody else wants to sell, and then now all of a sudden you have high supply, you may not get that good offer again. So take advantage, you obviously run the numbers for whatever asset you're looking to sell. And if it's a really good, thing, but again, talk to us early. So then we're, looking through all your options. We're taking our time, we can make offers, see and shake them out, make sure it makes sense, and then move it forward rather than you get scared with the news. But tune in. We're going to be streaming as much as we can and trying to shout from the rooftops to make you guys aware and ready. So we're ready to pull the trigger. This is what we're really putting this here in the stage of, so you guys can pull the trigger when you need to, when it's right for your particular situation, and not based off of, who's president, what policy, or what's going on. Obviously, that makes huge effect, but we want to make sure that you have all of the facts to make your own decision. So again, highlighting the lower risk, higher risk type of tenants sectors. And again, tried and true grocery, everyone can't live without. Discount retail, healthcare, that's on the lower risk scale. Then you have our fast food and QSR chains, that's in the moderate, because they do have some type of imports to a degree with some of their food supply. But again, they're providing a service where they're getting constant foot traffic, depending on, of course, the chain, the real estate, the tenant. So that's in need. And then the higher risk section was the apparels, the auto parts, home goods, and things like that. So you want to be more cautious. And if you do own a tenant like that, look inside of what they've been saying, especially if they're a publicly traded company. You can actually find information on them and start making your plans, and start early as possible. So keying it on the head is kind of reminders of the same stuff, but we have to keep dropping these in your head, so then you're well aware of it, and not be emotional when you see things moving around. Central need tenants, the hyper focus to underwrite very conservatively on your renewals. So we always talk about for people that's looking to purchase, that you're underwriting conservatively to make sure that you have a buffer, but then you're also doing that on the renewal side to see if there's any type of risk. Because if you see that you have some weak renewal options, like it's CPI or very low, like not like a 10% every 5 years, is more like a 5%. We've seen leases where the rent went down. So you're going to be putting yourself in a position where you can't sell it in the future, and you're not going to be having a hedge on the inflation. So you got to just renew your lease. We always tell investors to renew your lease annually to make sure that you're making sure that the tenant is in compliance and you're up to date on what's going on with your rights and legality there. And then, of course, locking in that long-term financing. Get in touch with Dave, get in touch with your preferred mortgage professional, and kind of talk to them. They have a lot of boots on the ground. They're talking with a lot of banks. The banks are telling them what they're learning, what their investors are telling them. So that's a huge source. Every time I call our mortgage lender, we learn so much. He's like queuing us in. He's talking to dozens of investors at the same time, doing multiple strategies. So then from different asset classes. And then you're also getting the feedback directly from the banks because they're telling you what we're willing to do financing at. So that's just a great source of information to put that on your networking list. And then, we always talk about this, and that's going to really be about my discussion in a couple of weeks is, are you a landlord or are you an income strategist? Because if we deal with a lot of landlords that's transitioning over and they can't take that hat off, and it's kind of hard to explain to them what they want, what they don't want, and how to itemize what's important as far as like time, family, body, being, balance, legacy, and try to reframe their thinking and look at the long game rather than kind of these annual increments. So look at your assessment score, see where you're at, and then see what the next moves will be, and then putting them systems in place so you can be able to move forward efficiently, which is the systems that we supply in the Net Lease Playbook, the assessments and the checklist about lease renewal and planning forward, and also educating yourself. This as an example, and again, I'm always relating net lease to time and freedom and what you want to do in the future. So we had an investor that invested in 4 Sunbelt rentals, fixed rental incomes every 5 years. And when they digged into the numbers, they didn't realize that they save over 20 hours a week. I'm doing a slide now. Let me see if I could pull it up. And I wasn't even aware of this myself until I started doing it. Let me see here. I think I closed it. Oh, here it is. The average landlord spends 8.4 hours a week managing rentals. The source is Buildium, and then PropertyWare, Property Management Industry Report. So some supportive stats is from 23 to 24. 72% of small landlords self-manage their rentals. 61% of those say time commitment is their number one challenge. And 1 in 4 landlords say that they are burnt out or looking to exit managing. So if you add all that up, that's over 400 hours a year. That's crazy. If you I even think about it, 400 hours. And on top of that, you're doing multiple rentals, or you may have a full-time job, and you probably have a business. So then you add up more. So then how are you really taking care of your body? And how are you with your relationships? And when you think about it, a lot of people are not too happy or good in those sections. So something to consider. So that's all I have for today. Let me see if anything popped up in the last minute. We're about 30 minutes in, which is good.
One more question I had is I talked to somebody else today as well. They said that as far as double net lease structures, as you know, there's some sort of landlord responsibility there. is how much, they were just asking in general, is there like a percentage or how much they should save per year just to put aside for, say, if, like the landlord responsibilities like roof and structure? Is there something that they should put aside for that per year, roughly from the income that they get from the property? Or
Yeah, so you want to see which of those elements you have to. So if you have roof, then we find out what is the square footage of the roof, and then what is the rate of replacement of the roof, including labor. And then you take a percentage of that, and you divide it over the life of the roof. So there's like a calculation, and we did it for another client to kind of find out what those items would cost over time and how much you should put in reserves. So if it's roof and structure and parking lot, you're adding all of those up and you're just putting stuff in the reserve. So saying 10 years after its useful life is getting towards its end, then you have that money set aside to then put into that project. So that's like I said, that's how you will calculate it. You just have to find out, because each market is different, because you may have this in LA or Fort Myers, and there may be different rates on how you can replace the roof. But you just want to put that to the side, so then when that time comes, you'll be in a good shape. Something that popped in my mind, this totally slipped. What was I going to add? I can't think of it now, but yeah, that's the best way you can go about it. Like I said, just being prepared. So you right now, that's the best way to think about it. But just looking at which items specifically that you have to cover, find out what the replacement rate is, how long the useful life is, and then the labor, of course, and then you're dividing that over the course of the years. You're just putting stuff to the side and just being ready for that if that time comes. So, also I want to mention, if you do happen to do that renovation when that time do come, and we talked about it just briefly because we didn't want to get too deep about cost segregation, to utilize that in your toolbox, knowing that we on the docket to we believe is to, well, it's in the proposed bill for 100% bonus depreciation. So you can have that as a really helper to get those renovations in and really maximize your tax opportunities. So good question there. So perfect. So yeah, we're about a little over 30 minutes. I think that's great. Any other questions? You put in the comments, and we'll try to see if we can answer it on next call. Or you can shoot us an email at dclark at American Net Lease, or Quinn, Quinn, at American Net Lease. We'll love to answer your questions, or jump on a call with us and talk about your specific situation. Some of it may need a little bit deeper dive. But other than that, enjoy the rest of your guys' weekend. Look forward to chatting with you again, and take care.